Hey guys, how are we doing? Crypto Insight UK here, bringing you back into the video. So I've got loads to talk about in today's video, as always, and I put a little vote out there on Twitter as to what you guys wanted to listen to, and you decided that you wanted a macro oversight, and so I'm going to give you that, and I might give you a couple of alts at the end that I'm looking at, but I wanted to cover macro as well. I just wanted to genuinely see what people were more interested in. So to start with, I'm going to go really large picture and then try and bring it in. It will like overlap one way or another as probably my brain works like in those areas and different things that I remember and want to talk about. But we're going to just listen to Ray Dalio here just for 1 minute because I think it's super important because it lays the foundation for what I want to talk to you guys about and a possible scenario that I actually think is net positive for crypto. Although it's going to sound scary when you first listen to it, I highly recommend listening to Ray Dalio generally and reading his Changing World Order, Navigating the Global Debt Crisis, all these sorts of things. Or the big. I've been listening to one at the minute, like the Big Debt Crisis or something. Also, his principles is good too. So, but let's just get into this so I don't get too off topic.
I think that right now we are at a decision-making point and very close to a recession. And I'm worried about something worse than a recession if this isn't handled well. A recession is 2 negative quarters of GDP, and whether it goes slightly there, we always have those things. We have something that's much more profound. We have a breaking down of the monetary order. We are going to change the monetary order because we cannot spend the amounts of money, so we have that problem. And when we talk about the dollar and we talk about tariffs, we have that. We are having profound changes in our domestic order, how ruling is existing, and we're having profound changes in the world order. Such times are very much like the 1930s. I've studied history, and this repeats over and over again. So if you take tariffs, if you take debt, if you take the rising power challenging the existing power, if you take those factors and look at the factors, those changes in the orders, the systems, are very disruptive. How that's handled could produce something that is much worse than a recession.
So he's obviously talking about China rising up, and this has been actually Ray Dalio got me into macro. I'd say like I was in crypto anyway, and then listening to some of Ray Dalio's work, and then reading some of his books. I listened to them audio actually, his books. They actually got me into macro. So what he's basically saying is that China are rising power, US are falling power. And this is one of the things that I actually mentioned, I think in the newsletter, but also on YouTube about Trump and his tariff policies. I thought that he's looking for his allies. If you remember, I can't remember whether I said it on here or in my newsletter. He's looking initially to see who reacts positively so he knows where his allies are. And then on Friday last week, I was listening to a podcast for guidance. If you want to stay up to date with macro, it's a great podcast by Blockworks. And they were discussing that potentially in the future, hypothetical situation, not that it's going to happen, hypothetically, if China like went to try and invade Taiwan, people would look to the US first off, and they would also, in this current regime, be completely dependent on China still for a lot of exports. And so what Trump may or may not be doing with tariffs is trying to reshore some of those things. One, to say to people, look, this is your warning to stop having everything coming from a country like China, for example. And two, like, you know where we stand because we're creating these harsh like boundaries. So are we going to get like a multipolar world where there's going to be a rise, at least in the short term? The negative side, and if you look at something that's really important that Ray Dalio often says, that really gets me thinking, is just because it hasn't happened in your lifetime does not mean it's not going to happen, and it hasn't happened in history. If you look around every 100 to 150 years, we see a change in the world reserve currency and the world's leading powers, and we obviously have been under the US realistically for about 100 years now, since World War II ended. Well, it's not quite 100 years, but you get the point. So that sounds a bit doom and gloom to start with, and I hope that I've got my few thoughts across there. Because we saw what happened with Russia and Ukraine. As soon as Russia went into Ukraine, everyone was like, oh my God, Russia's the worst, blah, 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 and we're going to do all this. But then we still buy our oil and gas from them. And like, It's true. It just happens. So what happens when the biggest exporter in the world potentially, or if there is conflict? I'm not saying there will be because we know what that could mean, and I don't know. I don't think it'll be conflict like we think it could be. It could just be trade wars for a long time. Um, who knows? And I'm not gonna predict that. I'm talking about like financial only. So what does that mean? Well, in that world, I actually think that crypto does very well because in that world, I don't think that comes quite yet because what I think will happen, at least in the short term, is they will probably find some sort of trade deal with the US, which will be positive. China will revalue, or China will have the space to be able to stimulate within China, and as a counterparty of that, Bitcoin will rally. I also think um, I'm going to get actually into the US in a second. So that's one aspect. And then further away from that is if we don't get this deal and everyone's like got their backup, everyone meaning both sides of the aisle, west and east, are all going to have to stimulate and reshore their economies by creating more debt. And then with more debt and more liquidity, Bitcoin and crypto probably go up as well, being a neutral asset. So I think in the medium to long term, it looks good for crypto. Better than it does probably for the dollar, realistically, and probably for equities around the world. The only other thing that might do better over time in that world is gold. I don't know if it will do better, but it should maintain value. Percentage wise, you would expect Bitcoin would increase in value more than gold, being as it's a smaller market cap and has the network effect and is more easily accessible by most investors. So that's what I'm thinking for like the larger scale, longer term time frame. I do think in the short term, as I said, we'll work. My base case would be that we work out a deal with China and we kick this can down the road. And then whether we can kick the can down the road until AI and AGI and a complete new paradigm shift for humanity, that's another way that we change the world order. That's another way where the world's strongest power essentially is undermined or changes to something else that we haven't seen. So that is still that paradigm shifting from this 100 to 150 year cycle, where instead of it then being another country, it's actually another product being AI potentially in that scenario. I mean, that sounds way more far-fetched, but I think it will sound less far-fetched in the next 3 to 5 years. So that's like the longer term perspective. In the short term, last week what we saw was the Federal Reserve actually came out and said we will basically backstop the market should we need to. Okay, and that's led to crypto rallying over the weekend a little bit. Like Bitcoin's up at 84,800. We haven't seen yet the futures. We've not seen the stock market open yet in the US. So let's see what happens today. Looks like pre-market we're looking to open higher, as you would expect, because what I've been saying is some of that uncertainty. I just went backwards. Sorry. Some of that uncertainty is now gone. So what you should then see is the VIX starting to decline, which is what we saw from. It was down like 30-40%, but we should see the continued decline of the VIX this week, should that be true. However, Trump, I'm going to go back to that tweet there actually in 1 second because I did want to talk about that. However, Trump did actually come out this morning or last night and say, look, no one's off the hook yet. We haven't said anything about tariffs. Like Friday wasn't really true, whatever. But because the Fed have come out and said they're going to backstop, and because we've seen he's shown some of his hand now, look, when for whatever reason, whether it's the bond market getting too much stress on it or whatever it might be, Trump did actually backpedal a little bit. Everyone's probably starting to think, okay, it's not as bad as we thought, and we've seen the worst it could be, and that's probably the end-ish of that. So if we then, not the end, but like we can see the end. Instead of it being like, oh my God, we don't know what the end's going to be, now it's like, oh, this is what happens when things go bad, whether it's Trump backpedaling because of the bond market or some other reasons. You can clearly see that he's not letting things run away, whatever his narrative specifically is, and whether you agree with that or not, don't care. That's what seems to be happening. And then the other thing is, on Friday, this is from our newsletter. I definitely recommend reading this. I had to give more of a macro overview here too. I retweeted what I quoted what Tad Smith said at the start of our newsletter this week. He's talking about Japanese being in the US and talking about them bringing the yen down so China can basically inflate, essentially, get rid of some of their debt. that could be what they're doing in the US and discussing potentially what to do with treasuries in the US as well. And then these are the next two things I wanted to look at, which was gold, Bitcoin, and the DXY. So if we're looking still at macro here, one thing that I've been discussing quite heavily for the last months actually is the relationship between gold and Bitcoin, and we're going to take it to the 3-day time frame first. Gold to start with, let me just point this out, is like 3-day, we've got bearish divergences, which is where we make higher highs in price action, lower highs in the oscillator, suggesting that the momentum in the move is waning. Again, this is now the daily, higher highs in price action, lower highs on the oscillators. So suggesting that momentum is falling. And then we look at Bitcoin in relation to gold. What we can see, guys, is, let's just make this orange because I like it being orange because it represents Bitcoin. What we can see here is, although they do move in the same direction, at least recently, when gold has been pushing, Bitcoin has been chopping, and then when Bitcoin pushes, gold chops/falls, and gold obviously has been pushing. But now all these bearish divergences on gold, I expect a pullback or a chop in gold whilst Bitcoin catches up. Should be pretty easy to see what I'm trying to say there. They are correlated in direction, but in my opinion, inversely correlated in short-term price action. And I keep saying the same thing as well. However, I said this. All right, I haven't said it. Where did I say this? I said basically that the fastest horse is where people move to when things become less uncertain, but I can't see where I've said that as well. I can't find it right now, just while I'm recording this. But basically, I think that when things are scary, people move to gold, makes sense, protect your wealth. And then as we can see a positive outcome for liquidity moving forwards, people move to where they're going to make the most percentage on their money, which for the last like 12 to 15 years has been Bitcoin. Another indicator for this has been the DXY. We've talked about the lag between the DXY falling and Bitcoin rising. We've used the example of the last peak for the DXY here. The DXY started to really depreciate there, and it took this amount of time before Bitcoin started to appreciate. Similarly, you can see actually recently that the DXY and Bitcoin have been falling at the same time. That's because people have been losing some faith in the US dollar whilst also trying to go more risk off. So they're becoming risk off against the dollar and Bitcoin at the same time, which has been that narrative. But let me just get rid of that. But what I want to highlight here is the rapid decrease in the DXY. And the last time we saw a rapid decrease like that, as I said, that was when Bitcoin pretty much bottomed in January of 23, and since has rallied over the last few years from 15,500 to 110,000 over this time period here, where the DXY, yes, has gone up and down, but essentially just chopped sideways. Recently, again, the DXY has lost a lot of strength. We've yet to see that push into crypto, that inverse correlation between the DXY and crypto. But what we should see is the Bitcoin and crypto start to increase in value, because one thing that the DXY losing strength indicates is that their dollars are less desirable in one way or another, whether that's because they're more liquid so people can get their hand on more, which is net positive for crypto, or they're less desirable in, like, people don't necessarily want to hold the dollar. Both of those things suggest that positivity, because you want to hold something that outperforms the dollar in both of those environments, and in both of those environments, it's like Bitcoin is a good hold, historically speaking, as literally proved to you. So that's what I'm looking at. I think that once this choppy period is over, we should see, as I said, stimulus probably from China. The Fed are saying they're backstopping things. We've got now this is where this tweet comes in. If I can find it, Dan Tapiero, I tweet. This is one thing that the US really need to take into consideration, because it is something that could hurt the markets indefinitely because I was reading something about this as well. So he says, Dan Tapiero says he admires what Trump, Scott Bessent, and Musk are doing about fiscal policy. But if sentiment keeps falling, it won't matter how sensible they are. There must be a stimulative offset. USD down is helpful, but the Fed needs to lower rates. Demand weakening offsets inflation. Basically, what he's saying is that if consumer sentiment drops too low, it's a self-reinforcing cycle where like things can sometimes not recover from negative sentiment, because what happens is people are negative, and no matter what you change, it kind of like they kind of keep reinforcing their own negative bias. So say if someone sells let's use Bitcoin for an example. Let's say the markets M2 picks up massively and everything's super bullish like macro for crypto, but everyone keeps telling each other how bad Bitcoin is and they're selling off. It does reinforce a selling cycle. And that's what he's saying. And you actually do see that in equities as well. And I think Jordi Visser was talking about this a few weeks ago. You have to be careful that sentiment doesn't run away too far in terms of to the downside, because when you start to get too fearful, it can be a self-reinforcing cycle. So what we are looking for is positivity from the Fed, which we actually started to get on Friday. The Fed, let's see if I've got my tweet, how far away my tweets are for that. The Fed came out and basically said that they would backstop the market. Here, top Fed officials said the Federal Reserve is ready to help stabilize the market if needed, which is great. And obviously, with the macro conditions potentially turning up, maybe a deal coming between the US and China, which is what I would expect as my base case, then everything's starting to look good. Whether and when that actually happens, again, I don't know, but these are the things we're looking at. We also look at Bitcoin. We can see that there is a bullish, I'm going to take us to a 3-day time frame here for Bitcoin, that we have bullish divergences on Bitcoin, which is the opposite of what we see on gold, where we've seen a lower low in price action and a higher low in the oscillator, showing the momentum to the downside is slowing, and 2 big 3-day candles here for Bitcoin. If we can get a clean close above the 87k range, we should start to head up towards mid 90s again, I would expect pretty soon. If we look at the weekly closes for Bitcoin, we've seen a nice bullish engulfing candle here with supported by volume. Would indicate to me that we are in and around a bottom. As I've said before on other videos, we could still sweep this low depending on what happens this week. However, my base case is that these have been good areas to DCA, which is why I've been screaming that to you guys. Similarly with XRP, did we get the bullish engulfer? We didn't quite get that actually. The last time I checked was before I woke up this morning. We didn't quite get the bullish engulfing candle, but still strong, strong volume here on the weekly coming out of this leverage zone. So we're now back way above the leverage zone and back into that DCA zone that we've been discussing as well. I'm going to take us to the 3-day time frame because I like that more for XRP structurally. A good area to be DCAing in my opinion here. And these are leverage zones, and we've obviously had that push out. If you did get into a leverage trade, just bring your stop loss up to 190, and then you sit in pretty. Whatever happens, whether we get that flush out again or not, you're still sitting pretty, probably in profit, because if you've been leveraging this whole zone, then you should be in profit whether it comes to here or not. And as I said, the take profit towards the top of the range, if that's what you're looking at. I didn't get into a trade this time. I think I did get into one, but I actually closed pretty straight away. So I didn't get the run on XRP. So that's basically where I'm looking at everything right now. I hope that kind of paints a bit of a picture for you guys as to what I think is going on in the wider markets, what I think is potentially going to happen soon, and why I think that. I might be wrong, but they're my thoughts. So if you did enjoy the video, I hope you did, guys. Please do hit the subscribe button, hit the like button, and let me know any questions in the comments section below. Peace up, A-Town down, as Crypto Insight UK would say.